Let's make sense of which way crude oil prices could be headed and what the outlook in the longer term is. We've got Christophe Roule, who is Group Chief Economist at British Petroleum. He joins us on the show from London. Christophe, to begin with, tell us how much is the oil prices upward trajectory coming from a real demand supply, and how much would you say is coming from geographical risk?
Well, we live in a world of two oil market outlooks. The one is based on fundamentals, where towards the end of the year we would see the effects of further effects, I should say, of falling demand in the OECD countries, the result of weaker economic growth, of very high OPEC production, of big increases outside OPEC, in particular in the Americas, and therefore you would expect prices to moderate. And the other oil market outlook which you have, of course, is the result of political tensions and speculation about supply interruptions, and that drives prices up. So we have something on the surface which is determined by security fears and by policy, and underlying that we have fundamentals which are not exactly strong.
And Christophe, how serious would you say the geopolitical risk is now, and what would you say the outlook over the next 20 years would be?
The geopolitical risk, how serious it is, you should ask a geopolitical expert. In the next 20 years we will see a sea change in these kind of questions. We just published an energy outlook out to 2030. According to our projections, North America, not the US, North America, Mexico plus Canada plus the US, will become energy independent by 2030. That region already exports coal, will start to export natural gas before 2030, and will produce enough unconventional liquids to roughly satisfy its own demands. That would change the equation a lot when you think about who is now always called upon as the last resource to protect oil supplies from the Middle East. The Middle East will remain a big source of oil supplies, but demand and the need for imports will shift from the Americas towards Asia, and that would change that security equation in obvious and also in unpredictable ways.
Right, so Christophe, what's driving demand at the moment? Is it China and India, and what's your outlook for the next 20 years again on that front?
Well, what we see is clearly the impact of fast growth in the non-OECD. We have this growth being with us since the 1990s. And these countries still have a long way to go to catch up with living standards elsewhere in the world. So we have a bifurcation here again, with demand in the OECD countries having peaked, we believe, and it is in structural decline since about 2005, as populations are stagnant and as the number of new cars is no longer sufficient to outpace efficiency improvements in transport, which is where the oil goes. And we have demand continuing to rise in the non-OECD, driven by urbanization and industrialization. That's unlikely to change over the next few years.
And also, Christophe, what's your outlook for oil over the longer term?
Well, what is interesting here, if you look at liquids demand and supply, a heavy concentration, of course, in liquids demand, as I said, in Asia, in particular India and China. Total increase of demand and supply in our outlook is 16 million barrels per day. More than 90% of that on the demand side of the net increase come from India and China alone. And on the supply side, very interesting, yes, we do, like others, have a big increase in OPEC production, but we also have a substantial increase in production of non-conventional liquids, in particular in the Americas. In Brazil, of deep water oil, in Canada, of oil sands, in the US, of shale oil, and also of deep water. And then in Brazil and the US, in addition, a substantial increase in biofuels. These are new non-conventional fuels, and they have these two very important implications. A, they come from this region not because that's where the resources are. They are in many places which don't accomplish these production increases, but because these are competitive, accessible upstream regions which allow for the competition, which creates the technologies which are necessary to produce these fuels. Just think Canada, US, Brazil. These are areas where new fuels are coming from because new technologies are developed, because companies can enter and compete. And secondly, what this means is that it will make North America energy independent, with implications of a geostrategical nature.